It's 16 minutes to 2 o'clock. Let's go to the money desk now here at eNCA. Devin Morgan, good afternoon. I see that the rand is at a two-year high. Two-year high. Surely this is good for consumers. What's behind the gains?
Well, certainly, Brady, and it is indeed something that will be very pleasant for consumers. So the rand is at its strongest against the US dollar in more than 2 years. The last time it was this firm against the greenback was back in February 2019. Let's bring this up and look at that trajectory, that trend that we've seen over the past year, now hovering around 13 Rand 50 to the US dollar. But, you know, it's gradual gain. You can see from the time it approached the 20 Rand mark a year ago, and we've had that panic around COVID-19 about a year ago, the market panic, and you saw the rand together with other currencies taking a hit. But since then, we've had a strong gain against the US dollar. Multiple reasons for the strong rand, by the way. First of all, high demand for the country's mainly mining commodities, which were priced very, very well. That brings in some cash, and the rand strengthens. Better forecast. A couple of months ago, we were looking at negative growth for the economy, and things were really bad on the jobs front as well. But, you know, revenue started picking up. SARS got more revenue collection done, and that was a sentiment boost for the country as well. And then the jobless rate, it may have been really critical when the numbers came out earlier this week, but believe it or not, those numbers were slightly better than many had expected. So all conditions fertile at the moment for the rand to do surprisingly very, very well against the US dollar. I want to get more insight on the local currency. Let's try and bring in now from Sasfin, Nelson Nair for more on this here. Nelson, thanks very much indeed for your time. There's been a very volatile nature about this currency, hasn't it? I mean, we saw the rand heading towards the 14 Rand mark at the start of May. You really couldn't bet that that traction would last, but it did. What's the biggest reason for the rand being where it is at the moment?
Yeah, good afternoon, Devin. I think you mentioned the strong commodity prices. You know, we must remember that South Africa is considered to be a commodity nation. You know, we have a very big and established mining industry for over 100 years. And whenever commodity prices, and I'm talking not just about gold and platinum, palladium, that sort of thing, but also the base commodities, you know, iron ore, copper, those prices are hitting all-time highs at the moment. And as a result, the sentiment and the forex flows, the foreign exchange flows that you spoke about coming in, is creating an environment where the currency can get a lot stronger. Talking to clients in the morning as well, a lot of them are saying that the fact that our long bond yields are still 7, 8, 9, 10%, there's nowhere else in the world where investors can get those sort of yields, and as a result, you're seeing a lot of foreign capital coming in to try and lock in those rates.
The biggest economic benefit for the economy at the moment, Ness, and from the strong currency, I would imagine it would ease imported inflation. In other words, the cost of goods we import is eased. Surely that trickles down to the consumer, so this is good news in some shape or form.
Yeah, absolutely. South Africa's biggest import, unsurprisingly, oil. Oil is purchased in dollars using rands, and if the rand strengthens against the dollar, then you need less rands to buy the same amount of oil. And ultimately, that translates into a reduction in the fuel price. I don't need to tell consumers about what we're paying at the pump at the moment for fuel. Obviously, that would, if the rand maintains the strength, obviously that price will come down in rands to lower inflation for the country, but also, you know, vast amount of consumer goods that we import, you know, from items of clothing, pharmaceuticals, that sort of thing. Prices will trend lower if the rand maintains these levels.
Aesthetically, when you look at a graph over the past year, it looks good looking at the traction, you know, when you measure it against what happened in May last year. And then I ask, surely, if it's not directly related, a strong currency does spell out, does reveal a certain good sense of overall sentiment on the country, whether direct or indirectly. Would you agree with that?
Yeah, absolutely, Devin. You know, you've been around a long time. I've been around a long time. And, you know, it's unsurprising that South Africans somehow measure their fortunes by the strength of the currency. It's one of the topics that is almost like a national pastime to talk about where the currency is going. And I think the fact that we're now at more than 2-year highs on the rand, I think is going to do a lot to boost sentiment. We see it even in some of the numbers, the manufacturing PMI numbers, for example, you know, that were in contraction territory for so long. Last 4 or 5 months, they were in expansion territory. And I think that's an indicator of a potential change in sentiment as regards the fortunes of the country.
And just finally, Nelson, I mean, we just saw those terrible, horrid numbers on unemployment earlier this week. I mean, they were better than expected, but still very critical. Just a couple of seconds left. I mean, one hopes that this type of good news on the economic front can reach the jobless state and probably even just improve that. Do you think there's any connection between the two, even if it's far apart?
Yeah, I think, you know, Devin, unemployment is always a lagging indicator. In other words, it tells us more about the past than about what's going to happen in the future. We should just focus on the sentiment indices right now. And based on that, we anticipate that there will be a fall, even if it's moderate, in the unemployment rate in the months to come.
All right, I'm going to have to leave it there. Nelson Nye from SASFIN, thanks very much indeed for talking to us. Let's take